All right, welcome back for another episode of Carnivore Trades. Today is Thursday, January 12th, 2023. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So, Spiders finishing the day. Well, it's about 10-15 minutes left. Spiders basically holding the gains for the most part. We are getting a little bit of a dip down here in the last 10-15 minutes. But for the most part, having a positive reaction to the CPI number with the triple Qs leading and the Russell leading the market here. Russell up about 1.5% on the day. So obviously the CPI number came in right in line with expectations, and we got a Goldilocks number. So 6.5%. One thing that is of note to me is I want to say it might have even been yesterday, but last minute basically, they revised the number from the expectation from 6.5 to 6.7 to 6.5%, which means that they basically front ran this and like they engineered this reaction essentially. And you might say, well, why, if they wanted the market up, why would they make the expectation lower? The reason is now we're getting into a period where pretty soon the narrative is going to change from, okay, hot print is bad. Hot print's still going to be bad, obviously, but if a print is too cold, it's going to be the Fed's losing control of rates. The Fed's losing control, or, the Fed's overdone it, and they've lost control of the inflation. And essentially the market wants Goldilocks, right? We don't want to crash up or down. We want control. So that's why the market was able to hold up nicely today. But bottom line, I still think the pain trade is just a little bit higher at this current time. Markets are holding up well, and for the reasons that I've mentioned here over the last couple of weeks. So semiconductors leading. Again, let's take a look at the SMH. That's confirmed now above the 200-day moving average. So the semiconductors are still showing strength. Russell 2000, that's been leading the last couple of days, also confirming above the 200-day moving average here. Dow transports, we talked about this also above the 200 moving average as well. Now coming into this trend line, which should be some resistance here, possibly tomorrow, and we might hit it. We do have airliners reporting and banks as well. So obviously that can move the market here in the short term. But bottom line, that's what's kept me from being too bearish on this market. Semis, Russell, transports leading. You don't ignore those things. They're going to tell you a lot about the market here. But overall, a pretty decent day here for the market. A lot of it was led by, like I said, financials. XLF there, you see XLE having a nice day as well. XLE just does not want to go down. We're inside of this little kind of bearish range here, and it's gotten outside of that. Now you still have that weekly red bar to contend with, so maybe it wants to go up there and test that. But XLE definitely being a leader today, as is the Jets. Airliners reporting tomorrow. Look at this. This is just a massive short squeeze here. Now, this is getting ridiculously overbought here to the upside. But overall, you got to respect these moves here in the near term. And I still think the pain trade is a little bit higher. Looking at just my Twitter timeline, there's a lot of angry bears out there right now. There's a lot of people that were like, just very, very angry about this move. And I still think we still have a little bit higher to go. If we look at the weekly, there's nothing to say we can't go up and test that 50 moving average one more time there on the spiders. The triple Qs, what did I say in December? We could go back up there and test 280, and we just got there today, 280.10. This might have a little bit more upside as well. Again, we've gotten above the 20 moving average a few times here on the weekly time frame this year. So I think another pierce is likely, and we did put in a higher low for what that's worth. So this might have a little bit more momentum behind it. But that said, I'm not expecting a ton of upside, and I'm not expecting the upside to last all that much longer here. I certainly wouldn't open fresh longs at this level. This is, we're definitely getting a little long in the tooth, but you had to, you got to figure we had an inside bar here, a bear flag on the daily, and that failed. So generally you get a pretty powerful move to the opposite direction when that happens. So you got to respect this market here, respect the strength in the near term, but also recognize that it's starting to get a little bit on borrowed time here, if you ask me. So we did hit the 200 moving average. They've kept us off of that for the most part today. We did go up there and just pierce it a little bit. If you look at the ES, This looks like a 4,000 pin to me. So remember, we have OPEX next week, and it is a shortened trading week because Monday MLK observed. So there will be a shortened trading week again. And with these monthly OPEXs, when you have a shortened week, a lot of the time the games will start on Friday. So just be aware of rumors and BS starting tomorrow. But overall, I don't see any real problems here with this market. Yes, it's into resistance. Yes, you're into this trend line. I know the trend line. But you got to look at the weekly as well. And again, we're still, we can still go a little bit higher here. I still think that that's possible. I also think the VIX wants to get down to possibly 18 here. That's a pretty good sell-off. I talked about this yesterday. I said we might get a vol crush today. Well, we definitely got one today, down 9% here. So this is basically testing. It's close to 52. Well, not quite 52-week lows yet, but it's getting there. So, when I see this, that tells me we probably have a little bit higher to go here. But there will be a time to possibly get into the VIX. There will be a time to short this market. I just think the pain trade right now is still just a little bit higher here. But again, like I said, I wouldn't be, looking to open longs. You wanted to long back here. You wanted to long in the end of the month for the January effect. And that's basically what we're getting now. Now this market is, I'd say it's closer to resistance than support for the most part. But we'll continue to respect this move as long as the transports hold up, as long as the semis hold up, and the Russell, as long as the Russell is leading and the NASDAQ is leading. We're going to give the market a little bit of an upside bias here, but we're not like uber bullish here by any means. So anyways, again, triple Q's resistance around 280. We probably go touch that 100 moving average, maybe even tomorrow. But it is getting a little long in the tooth here in the short term. Doesn't mean we can't trade up for OPEX. That's another reason why I'm not too bearish. Is usually there's not for OPEX week, they like to have control over the market. We also have VIX expiration, I believe, next week as well. Let's look at the VX. I'm not sure. I'd have to double check on that. But either way, they usually like to keep the vol crushed into OPEX. After that, you can get a bid here. But for right now, it's generally the market makers want to keep everything kind of quiet for OPEX week. And I do think we are able to hold up here, at least for the near term. Anyways, all right. So we talked about the indices. SMH here, up 1.3%. It got through that gap fill there. Again, you got these pivots up here at 230. There's nothing to say that can't be hit. Possibly double top there. Just above that, you are into the 50-week moving average again. So we'll see if that can pierce one more time. Again, you did put in a higher low, so there's nothing to say this can't inch up a little bit more. But yeah, nice move there for the semis. Cloud software, we just took a gain on CLDL, 2 times long cloud software. So that's now 4 winners, if I'm getting that right. Yeah, 4 winners in a row to start the year here. But yeah, it's a little over 6% on this one. CLDL there. But yeah, IGV back above the 100 moving average. Again, this has a gap right up at 269.26. So that could get up into that area. Then, of course, you get that big reversal bar. So again, upside's a little limited. But again, we're going to give the market the upside bias. You still have higher lows for now, and we need to respect that. Transports, I just mentioned. Again, down sloping trend line. Probably is a good area here of resistance here in the near term. And remember, we did have a failed pattern here. So watch for the transports to start to roll over. I think the transports will start to roll over first, and then the market will roll over, and then tech will roll over, etc. So we'll keep a very close eye here on the transports. As they told us back in September the market was going to come down. They bottomed before the market in the fall, and then they started breaking down before the market. So again, look at those transports. They tell you a lot about this market. All right, interest rates here. TNX taking a good hit. Again, CPI coming in as expected, so Treasury's coming down. Or I should say Treasury yields coming down. TYX also taking a hit here. This is into, I want to say ZB here does have a little bit of resistance here into this pivot. So we'll see if that puts in a lower high. It had a nice pop today, though. So we'll respect that in the near term. I'm not doing anything with treasuries currently, although I do think ZT, the 2-year, still gets up to that target there. And until that happens, I think I would give the market kind of an upside bias as well. Anyways, over to home builders. XHB, this has hit my max move here. Same thing with ITB. I shouldn't say it like that. This has hit my upside target. Doesn't mean it can't go a little bit higher here. Could you get up into these pivots around 68? That's certainly possible. XHB, could get up to that level as well. There's a pivot right there. But this is now getting into, what I would call a sell zone, just so you guys know. Same thing here with VNQ. Could it make a higher, or, could it go back up to double top, maybe even make a higher high? It's possible, but I see limited upside here. And this is a sector that I do not like going into 2023. This is just a January rally here, nothing more than that. XLF, again, banks report tomorrow. Nice move on Goldman today, lots of short squeezing. JPM got up to my level 140. I told you guys that a while ago. Earnings could push it up to, who knows what's going to happen. You can always gap up on earnings. You could gap down. Who knows what happens. That's totally a wild card, but that has hit the upside objective here. And this is, quite frankly, this is pretty overbought. It's like, this is not even really corrected. And, this is just a little pullback pattern here. So, I think there's a lot of downside real estate on JP Morgan, just throwing it out there. But I do think banks as well will be a short coming up shortly. No pun intended, but we'll see what they do again in the earnings. And, there could always be a gap up or something like that. So you want to just wait for that and analyze it as it happens. Anyways, broker dealers also having a nice day. That should go up and test 480. And then, of course, you have that red bar above that. I think upside is a little bit limited here. But again, earnings can always change things. So just be aware of that. On to crude. So more of the same here. So we did close above that inside bar high yesterday. So that is a sign of strength, a major sign of strength here for crude. And now I'm much more neutral on it. And you have a legit shot of hitting this inverse head and shoulders. So this can trigger. It has not triggered yet, so don't go long right now. They could still take this down, and you could still, the weekly pattern is still not good. You still have an inside bar on the weekly. So just be aware of that. But it looks a lot better now. So we'll see what we get here. The Biden administration said that they wouldn't rule out another SPR dump. Okay. Allegedly. So anyways, crude up a little over 1% today, basically touching that 50 moving average. I wouldn't do anything with it right now, though. But we'll watch that pattern, see if it triggers. But remember, the weekly is still bearish. Over to XLE. Just does not want to go down, still wants to go up and test that red bar high, if you ask me. But it's in decent shape here. XOP, same thing, although this is in much worse shape. And there is the closing bell. So market's finishing up 38 basis points here on the spiders. We'll get back to that at the end. You still have a nice inside bar there on XOP. I would avoid this. And then the OIH just doesn't care anymore. The OIH just making new 52-week highs today, all the way up to 330. The thing with energy right now, and I know this has definitely exceeded, I thought this was going to be still into backing and filling mode. I still think it gets down there eventually. I don't think it's quite ready to break out just yet. But you look at the price of crude, you look at the price of nat gas, and then you look at all these energy stocks. And unless we have an explosion in crude prices like very shortly, it's going to be hard to justify that move there. So either way, OIH, it's a powerhouse. I'm not touching it right now, but we'll respect it for the time being. It's just really holding up really well. Anyways, over to nat gas. A little bit of a nothing burger. It was up and then it came back down. It's now flattish. I still like this area on the weekly time frame. Even just a doji print on the by the end of the week would be a nice move, or a nice possible bottoming signal there. Equal buyers to sellers into support, into that 200 moving average. I think it should get a bounce here at this level. Over to the dollar. What have I been telling you guys for months? 102. So we're down there. We're very close. 102.08 essentially is where we got to today. I still think this can get a little bit lower. I wouldn't rule out a pierce of 102, maybe 102.75, 102.50. And then I think the dollar is a buy. So I'm just going to give that one out. That's a freebie there for you guys. The dollar is a buy at that level. But yeah, nice dump here. It took a little bit of a while. I had to grind lower, had to consolidate a little bit, but nice dump there on the dollar index. And that is starting to get into the level there on the daily. Gold here. And again, maybe gold can push up to 1925. There's nothing to say it can't do that, but I would not chase it up at this level. Just don't do it. And I think the dollar index is, like I said, it's close to bottoming. So I wouldn't want to be chasing gold here. You wanted to get in gold back here, not up here. or you wanted to get in on this pullback. Don't get it up. You know, what are you doing trying to chase it up here? So, yeah, just leave it alone. Nothing, again, nothing to say it can't go to 1925. You know, there's that trend line right there. But just be aware that you're way closer to resistance than you are to support at this time. And silver also is kind of diverging a little bit. So silver is not making new highs with gold. So silver a little bit on the weaker side. I still think this one has to correct as well. And I'll be waiting there when it does. And also, I just want to annotate, GDX can still get up to about 33. And I got some question about SILJ. I still have a target of about 12 on this. So these can still go a little bit higher, just so you guys are aware. But yeah, the miners are holding up a little bit better. But again, I wouldn't be buying them here because you know the time to buy was down here, the time to buy was on this pullback, etc. But I just wanted to annotate that for everybody. And then platinum here, also backing off. I think this is overbought, needs to come back in as well. Copper here, a little doji candle. I told you guys 420. That's where it stalled out today, 421. Unless it has a massive crash tomorrow, it's going to negate this inside bar. So copper will be, you know, potentially you could buy the next dip, you know, I would say. But big move there, impulsive move. And assuming the gains hold tomorrow, this is looking much, much better. Let's look at the COPEX. I don't look at that often. Yeah, COPEX, huge move. But it is getting into resistance here, right? So right up into that red bar, you're overbought. I mean, yeah, you flagged here, but you flagged way lower. You know, 2 weeks ago, we were at 35.50, and we're at 41.04 now. So due to come back here, but nice move there for copper altogether. And then Bitcoin, I finally get, you know what, I'm going to go over to TradingView for it. I stopped using TradingView because it wasn't worth flipping over to Bitcoin every day because all we did was talk about the 1% range it was sitting in. But here we go. We actually have something to talk about today. So Bitcoin power surge. Let's take a look here. Up 6%. Was up a little bit more, I think, earlier. And this started surging last night. Let's look on the intraday. Overnight, this really started to get a bid and held up flagged and then power bid here. So maybe this, you know, starting to front run a little bit. There was also, just for what it's worth, like a dash for trash, Carvana up big, Bed Bath & Beyond up like 40% here as well. So kind of the really beaten down names starting to get a bid here. And maybe that's part of the January effect finally starting to take place. But Bitcoin finishing at 19,000. So nice outside move, higher high there. It's into the 200 moving average. We're very close to it now. We'll see what it does there. Maybe it wants to go up and test 20,000 one more time. Get a bunch of bulls on board. Still to consider though, that weekly pattern is not good. Okay. So it's got a lot of work to, you know, if it were to somehow close above this red bar high on a weekly basis, then I would change my mind on it very much so. But I do not anticipate that happening. It just looks like a short squeeze to me. Ether also having a very nice day as well. That's actually above its 200 moving average. So Bitcoin getting a little bit of a bid here and, you know, finally shaping up a little bit. All right. So yeah, back over to the spiders. Again, decent close here. Big things to remember. Now moving forward, too cold of a CPI print, bad. Too hot, also bad. Goldilocks, good. That's really what we're looking at here. You did finish with a little bit of a hanging man candle here today. Normally that's bearish. I don't think the gap was high enough to really hurt it that much though. And again, like I said, we still have the semis outperforming. The transports are still outperforming. The Russell is still outperforming. I still think the pain trade here is higher in the near term. But it's not like, we're not looking to buy the dip here, basically, is what we're saying. So anyways, guys, going to wrap up here. You guys take care. Come find me on carnivoretrades.com. Talk to you guys all tomorrow.